All right, everybody. It looks like the time is about 4 o'clock p.m. right on the nose. Thank you all for joining today's session. My name is Asia Simpson. I'm your wellness and benefits consultant. I support you, all of the employees and staff at Montebello Unified School District. And if you attended last week's session, you probably saw my face. Um, just so that you all know, today's session will be recorded. So if you have to log out for a moment, or you have poor connection, or you know someone who needs to log in a little bit later, or you just have a need to review the content of today's session over again, you'll be able to go back and review this again. If you missed last week's session, HMO versus PPO, please refer to the flyer that was sent out to advertise for this week's session. It is in the bottom right corner, and you can review the recording as well as see the content that was sent out. I will send out another flyer for next week's workshop, and it will also have the recording for this session. If you missed the email that is sent out, please make sure you visit the Montebello Unified School District website and go to the benefits page, and you will be able to access all of the recordings and from the flyers. They are going to be posted there. Okay. At the conclusion of all of the workshops, just so you guys know, I will be sending out one large document that has all the recordings, all the resources. I want to be sure to remind you all that on August 31st, we will be having the virtual vendor booth session. I keep talking about this, and I've been talking about this in the last session. This is going to be a great session for you to get a chance to talk to all of the health insurance carriers. We've got Kaiser, Anthem Blue Cross, Blue Shield, Health Net, United Healthcare, MetLife, VSP, all of them are going to be there. So if you have questions, you want to understand different things about the plans, they will be there. You will have an opportunity to talk to them one-on-one, and you can come anytime between 3:30 and 5:30. If you can't get in right at 3:30, it's not a problem. We're going to be there for 2 hours. So just wanted to let you guys know that. For those of you who are just joining, today's session is on flexible spending accounts. That's what today's content is going to be about. And if you're just now joining and just hopping in, this session is recorded, and I will actually also be providing to you guys the slide deck that we will be covering today. Okay. So without further ado, I'm going to share my screen, and if any one of you would be so kind as to take yourself off mute and let me know if you can see my screen.
Yes.
Thank you so much. I appreciate that. All right. So many of you may have attended this session in the past. Some of you may have not, but this session is on flexible spending accounts. And what we're going to talk about in today's session is we'll first start off with talking about what a flexible spending account is. And we will talk about what are some things about flexible spending accounts that are um, uh, the same across all flexible spending accounts, regardless of where you work. And then we have some elements of it that are specific to Montebello Unified School District. So we'll look at that, and then we will take a look at two different types of flexible spending accounts, discuss the differences between the two so that you can decide whether or not one or both might be a good option for you. And I'll briefly go over how they work in terms of the reimbursement piece of things. And I'm going to go over an example so you can kind of see why they could be advantageous to the average person. And then I will definitely be taking questions, preferably more at the end. But if there are any points of clarification that you need, please feel free to take yourself off mute and ask the questions. I do like to do some check-ins with you as we go throughout the presentation to make sure I haven't missed anyone. So Montebello Unified School District's flexible spending account is called Flex 125 program, and it is administered by a company called Shakely that is based out of Ohio. And just so you know, a FSA or a flexible spending account It's essentially a special account that is set up where you can designate a certain amount to be deposited into so that you can use that money throughout the year to pay for out-of-pocket healthcare costs. And you don't pay taxes on this money. So that's the benefit to it. And so there are certain costs that you all typically will always have. Like, you have to pay for glasses if you wear glasses. Sometimes you have prescriptions if you have prescriptions. So there are a long list of things that you can use a flexible spending account for with tax-free money to assist you with paying for those expenses. And this is really an IRS tax favored account that is regulated and stipulated by the IRS. There are two different types of accounts, and some people may find use for both. For people who don't have children or a dependent, only one might be useful. And the way that you can use them and the way that the IRS sees them is a little bit different. And we're going to cover that in today's session. So the first of the two accounts is a healthcare reimbursement account. And we're going to go over the details of that here in a minute. And then the second is a dependent care reimbursement account. Okay. So before we hop into the details, I want to just talk about who might benefit from a flexible spending account. So anyone who has regular, planned, or predictable out-of-pocket expenses for the following types of expenses should consider a flexible spending account. So if you have medical, dental, vision costs for yourself, for your spouse, for your children, any dependents that are on your plan that are not paid by insurance, then you might want to consider a flexible spending account. If you have deductibles or co-pays, prescriptions for a child and a dependent care expenses, and dependent care could be a dependent could be a parent that you're taking care of, and we'll talk about the details of that. And they say planned or predictable because you have to really determine the amount that you're going to have taken out, the total amount that's going to be taken out. And so you kind of have to have an idea of what that is. You don't have to provide, proof of what that's going to be, but you really want to find out or know from a standpoint of just determining what the amount is, because you don't want to overdo it and then have too much money at the end, and you may end up losing out on some of the money that you have allocated. And we'll talk about that in a minute here. So how does this thing work? Well, a healthcare FSA works. I kind of alluded to this a little bit. So you'll be able to, during the open enrollment period, which for those of you who don't know or didn't attend the last session, open enrollment goes for CalPERS, it goes from this year from September 18th to October 13th, I believe. We'll look at that here in a minute. And that is the time that your benefits department has stipulated for you to make your FSA elections. So during open enrollment, you'll elect the total amount. Let's just say in a given year, maybe this is your first time ever utilizing or taking part in a flexible spending account. So you are not 100% sure. So I always say to err on the side of being very conservative. So let's just say you don't know, you estimate your mind and you say, okay, maybe it's around $1,500. So you would actually allocate when you fill out the forms, and I'm going to show you where those forms are. You would fill out the forms. This would be done electronically online, and I'll go over the Shakely website with you. The amount that you want allocated. Now, one lump sum is not going to come out. It's going to be broken up and deducted from your payroll deduction over the course of the plan year. Okay. So you don't have to worry about if you allocate $1,500, are they going to take everything out all at once? No, they're going to break it up. Each year, there is a maximum amount that the IRS allows any one individual to allocate the maximum amount up to. And the IRS maximum allowed amount right now currently for the 24 year, actually it's really for the 23 year, but you guys are making your elections for the upcoming year. So, but it's going to be $3,050. Now that amount may change as the IRS updates the new amounts, and they typically don't release that information until November. But for you guys, that's after open enrollment. So you really need to make sure you have, the stipulated amount. And so what you guys are going to go off of is going to be the $3,050 for the upcoming plan year. So you can allocate up to $3,050. I do not suggest that if you've never had a flexible spending account before and you have no idea of what your expenses are and you're not really 100% sure that you're going to utilize $3,050, don't do the maximum. You're not required to allocate the full $3,050. As I mentioned before, you really want to start off conservative if you can. That way you ensure that you are using all of that money. Because there can be some downsides of having too much money. But there are some contingencies for if you use a little bit too much, and we'll talk about that here in a minute. So for a healthcare FSA, the allocation that you use, you want to also consider who all you're going to need to use it for. And if it's just you, again, definitely be conservative. But if you're going to be using it for a spouse or for dependents, you want to ensure that you have enough for all of you for the year. So if you know that every year you take your kids in to get glasses, or maybe this is a year that you want it to be a little bit higher if you're going to be needing some extra money towards the cost of braces, so that, from year to year, it may be very different. So what I will say to you, though, is that the way that the IRS deems a healthcare FSA is different than how it deems a dependent care FSA. And why that's important is because a healthcare FSA, the full amount that you have available from day one of the new plan year is going to be different on day one of the new plan year for dependent care FSA. And it's all boils down to how the IRS deems it. So the IRS deems a healthcare FSA as unpredictable. So what that means is your full amount of whatever you allocate. Let's just say you're like, I've got a lot of expenses this upcoming year. I want to go ahead and allocate $3,050. And I'll need it for my kids. I'll need it for myself. I just need the full max amount. And so if you set that aside and have that amount allocated where it's broken up to be taken out of your paycheck all throughout the year, you don't have to wait until $3,050 has been taken out of your paycheck with a healthcare FSA. On day one, you have access to the full $3,050, even if you've only had one or two deductions taken out of your paycheck. So that's how it is very different. So just know that you're kind of almost, in a sense, if you use, the bulk of whatever you allocated in the early part of the year, you're kind of borrowing against, what it's almost kind of like an IOU, if you will. It's going to come out, but even though that amount has not fully been taken out of your paychecks yet, you have access to it. And it is all because the IRS considers medical expenses to be unpredictable. Well, what are some of the things that you can actually use it for? Now, this is not a full extensive list. However, where you will be able to find the full extensive list is going to be in your open enrollment manual for the new year for the flexible spending accounts. And I'm going to show you what that looks like. And I'm not sure yet if the benefits department has posted the new one up. It has just come in, and so I'm not sure if they have posted it, but it will be available by next week if it is not right now. But just to give you a preview, some of the things that you can use it for are going to be for co-pays, deductibles, lab tests, prescription drugs, if you are pregnant, childbirth classes, ambulance services. Those will be costs that aren't already covered by your health plan, cancer screening. If you've got some out-of-pocket costs for physical therapy or occupational therapy, those are all medical related expenses. I mentioned before, if you've got to get glasses, eye exams, contact lenses, anything that's not covered. Now, I want to mention to you with your vision, there may not be very much that you have to pay out of pocket for the vision piece of things, but if there is, you can use your flexible spending account for them. One thing I don't think you can use it for is like contact lens solution, that type of thing. But what you're going to want to do is when you look at your packet, inside the open enrollment packet for Shakely that they provide for the new year, they have an extensive list. And if you don't see it there, you can always visit the IRS webpage, because the IRS is who stipulates what things you can use this flexible spending account for. You can use it on things like dental implants, x-rays, et cetera, et cetera. So there's a lot of things that you can use it for. Well, what can you not use it for? Well, you can't use it for a formula, baby formula. You can't use it for cosmetic procedures, home drug tests, hot tub, jacuzzis, things of that nature. You can't use it for that, okay? Now, I'm not sure, they may have updated this in light of COVID, but you may be able to use it for any out-of-pocket costs that are not covered by your plan for COVID tests. They could potentially be. You'd have to check that out in the IRS, on the IRS webpage, or inside the Shakely open enrollment packet. So just so you know, but so there are certain things that you cannot use it for. Okay. So moving on, actually, before we move on, I just want to make sure there are no questions just yet on the actual healthcare FSA account. Does anyone have any questions? Okay, don't see anything in the chat box, so I'm gonna assume we're all clear thus far. So moving on, how does the dependent care account work? So I mentioned there are two kinds, and the dependent care account of the two is for daycare expenses for children, or for certain expenses for disabled dependents or elderly parents. So you can use it for all of those areas. Now, this is a separate account from the healthcare FSA, and people do sometimes have both. So I do get the question of, well, do I have to choose one or the other? No, you can actually have both, because both of them are set up different. The allocation amounts that you are allowed for both of them are different, and how the IRS deems them is different. So the IRS maximum allowed amount for the dependent care account is for $2,500 per qualifying dependent, with a max of $5,000. So basically, you can really only have you can use it for up to 2 dependents in a household, because the max you're going to be able to allocate for is 5,000. Okay. Married filing separately, you can only have 2,500 per household. That's the downside to it. So I don't know how many of you have experienced married filing separately. Some of the downsides, there's quite a few from a tax standpoint. So if you're married filing separate, you cannot, the max for your whole household, even if you have more than one dependent, is 2,500. So dependent care expenses are reimbursed based off of your account, available account balance. And what that means is the IRS deems dependent care expenses as predictable, which is different than the healthcare FSA. If you recall just a bit ago, I mentioned that the healthcare FSA, the IRS deems those expenses, those medical expenses, as unpredictable. So everything's available from day one. Well, because the dependent care account is deemed by the IRS as predictable, you are not advanced the full amount of your annual election from day one. You can only use what you have already had deducted to whatever point you are in the year when you're ready to use it. So if you are in the month 3 of the year and you've only had, 6 deductions taken out or 5 deductions taken out, you only have available to you to use for dependent care expenses the amount that you have had deducted thus far. Okay, so that's really the difference. So you want to keep those things in mind when it comes to using the dependent care versus the healthcare FSA. Okay. And just so you know, when you go to get reimbursed for those dependent care expenses, they are actually based on, they're paid out based on the date of service that is provided and not the date of payment. And that's also a very important thing to note, because sometimes dependent care expenses, like a daycare, they require you to pay, at a certain time prior to, you actually having your child or your dependent at the actual facility. So you may pay a month before, and say you may pay for the services in a February, and they don't start going to the facility until March, or to the daycare place until March, and you want to submit for reimbursement, you won't be able to submit for reimbursement until they actually start going, not when you pay. Okay. All right, daycare expenses eligible for reimbursement. So, a couple things to know. Daycare expenses are covered until your child reaches 13. So, anything over that, you cannot, unless they are deemed special needs, or disabled, or something that falls under the category that the IRS allows for children that are over 13 in special situations. Preschool and nursery tuition is covered, as the IRS does not consider it preschool to be educational. So in other words, if you have your child who's in a daycare type of setting, it cannot be an educational setting, because that is considered, not to be an eligible type of service. Once a child enters kindergarten, only before and after school care is eligible for reimbursement. Babysitter expenses can be reimbursed as long as the person who is doing the babysitting agrees to the following criteria. They are okay with allowing you to provide the Social Security number to Shakely when you're submitting a request for reimbursement. And the people who do the babysitting do have to meet the criteria of, they can be the employees, it could be your children they cannot be your children under the age of 19. So you can have a kid, but you can have a kid do the babysitting, but they cannot be under the age of 19, in other words. And grandparents or relatives, friends, or neighbors, they are, they're okay to actually to be the babysitters. But again, if you have kids, you want to make sure that they are over the age of 19. So summer day camp is covered as long as the care provided is custodial in nature and not educational. Custodial and elder care expenses are reimbursable as long as the expenses are not attributable to medical services. Basically, what that means is, part of the services that are provided for elder care, sometimes they involve things like administering medications and whatnot. If it's a medication or medical service related type of activity, then unfortunately that you can't be reimbursed for that. So if it's regular daily care, for normal things that they may not be able to do for themselves, that's fine. But when we start to step into the area of administering medications, then that is not the services that you would pay someone for. That they are not they're not eligible for reimbursement. Okay. And the individual must spend at least 8 hours per day in the employee's household. Okay. So that's in the case of the elder care expenses, if they're going to be coming to your home to do it. Okay. Okay, before I move on to this example, so I can kind of help you understand the benefit to having a flexible spending account, does anyone have any questions? Don't see anything in the chat box. So I feel like I must be doing pretty good. Any questions?
Yeah, I had a quick question. How is how can you, do they give you a credit card of some sort?
Very good question. We're actually going to cover that, but yes, so you typically will receive a flexible spending debit card. And the thing about the debit cards, that you would use it just like when you go to, let's just say you use it for a copay, you would use it at the whatever card machine they have. But keep in mind, not all places may accept that particular debit card. So in that case, you would actually submit your receipts to Shakely for reimbursement in the case where they don't accept the card. I highly suggest you have the Shakely app where you can do it online, because they do process the reimbursements a lot faster, and you can take a picture of the receipt. But if you're not comfortable with that, you can always fax or mail that in. And we're going to go over the details of that a little bit later, but that's a very good question. Okay. Any other questions? All right, so let's talk a little bit before we get into actually some of the details of what the previous individual just asked the question on, like, is there a card? We're going to get into the details of that. But before that, I want to talk to you a little bit about why it is beneficial to actually have a flexible spending account. And I want to kind of show you the numbers. So we're going to use this example. Let's just say this person's name is Karina. Karina is single with 3 children, and she earns $3,000 a month in this example. She pays $300 a month in childcare expenses and $25 a month for prescriptions. Must be nice, only $25 a month in prescriptions, and it doesn't really seem realistic. If you've got 3 kids, you're only paying $25 for prescriptions, but hey, it's just an example. The calculations below, I'm going to show you with and without. So on the left side, where Karina has a FSA, actually, let's start without the FSA on the right side. Karina without an FSA, she's got the $3,000 in income. She's hit with $271.25 in federal taxes, $97.11 with state taxes, and between Social Security and Medicare, it's about $207.69. So after everything's said and done and Uncle Sam gets their cut, Karina takes home $2,402.14 net income. She's still got to pay for those childcare expenses, and she's still got that $25 prescription. So after everything's said and done, and she's paid for all of the childcare expenses and prescription, her income is $2,077 that she has left to pay everything else. We all know in California, that's very hard for us to make ends meet with that. So every little bit of money counts where you can save. With a flexible spending account, if she knows she's already going to always have to pay those childcare expenses and that $25 for prescriptions, then she might as well set it aside in a FSA before Uncle Sam gets his cut. So $3,000 is her income. If automatically off the top, she sets aside $325 into a flexible spending account, she's not going to be taxed on $3,000. She's going to be taxed on $2,675. So what that does is it lowers her federal and state tax. So her federal tax is now $229.12. Her state tax is $81.36, and the Social Security is still the $207.69. But her income is now $2,153.83, and she's still got her money set aside for those the prescription and the daycare expenses. So it does actually save money from a tax standpoint, and it still allows her to be able to have the income allocated to the daycare and medical expenses that she still needs to. And so that is really one of the benefits. She's going to be saving about $80 per month for a total annual savings for the whole year of $956.28. Okay. So, there is a benefit. And in this example, she only allocated, $300 a month for that. It may be more for you. So your savings may be a little bit different. So, okay. All right. So we talked about the importance of being accurate when you allocate a certain amount and not wanting to go too hard for the gusto if you don't know what your expenses are and allocating the full $3,050. You don't want to do that. But if just say you do, let's say you allocate $2,000 and you only have about $1,500 worth of expenses. Montebello Unified School District has elected to allow you to roll over up to $500. Now, I want to say you may read some things that says that you can roll over up to $610. From an IRS standpoint, that's the maximum amount that a employer can allow the employees to roll over. just know that Montebello has elected to allow you to roll over $500 of any unused money that you were not able to utilize throughout the whole year that you had allocated to your flexible spending account. And with this, what will happen is if you get to the end of the year and you still have $500 left over, you can roll it over and add it on top of your next year's election. So in this case, if you carry over the max allowed, this could allow you to roll over the $500 to the next year's amount, and it'll be about $3,550. And in all actuality, it could be a little bit more because the amounts for the upcoming year that the IRS established around November, December timeframe, you could end up having a little bit more. But for the sake of what you allocate during the open enrollment period this year so that you're set up for your deductions next year, know that it's $3,050. And if you don't use the full amount, you can even use this year's example. If you have a flexible spending account, you're on this workshop webinar today and you're wanting to find out, well, what if I've already got a flexible spending account? I'm not new to this and I don't think I'm going to use all of it. Well, what's going to happen is if you still have any left over, you can actually roll over 500 of what you have left over to this year to next year. You just want to be mindful during open enrollment of what you elect for next year, because you'll know that whatever you elect for next year, if you're not going to use the remaining amount that you have by the end of this year, you're going to roll that over, and that is going to be on top of your next year's money. So you do have that option, but just know that if it is more than $500, you do lose it. Okay. So that's why I encourage you to really sit and think about, before you make your elections, what are you going to be needing this for, and how many people are you going to need it for? So there's a very, very good question in the chat box. Does it roll over automatically? It does not roll over automatically. You do have to elect for it to be rolled over. In fact, you do have to actually make your elections each year for your flexible spending account. You can't just, even if you use it all up and you're like, okay, I used everything all up, I'm just going to go ahead and keep the same amount, and you don't stipulate that you want the same amount for the next year, your flexible spending account will be, they'll terminate it. So you have to make elections to determine that you want the rollover each year. You have to make elections for your flexible spending account for the upcoming year. So you do need to, it does not roll over automatically. Okay. Any other questions? That was a good question. Okay. All right. So let's go ahead and move on to the next part. All right. So key information for you guys. And actually, the person who asked the question, that was the first thing on the next bullet. You must re-enroll for the plan each year. Elections do not automatically renew. Elections are done during the open enrollment season. As I mentioned before, the open enrollment season this year is September 18th through October 13th of this year. And the expenses for the year should be conservatively estimated. I mentioned that before. Your election amount cannot be changed throughout the plan year unless there is a change in status, and that is considered a qualifying event. What I mean by that is, let's just say you have a child, or you have a loss of a spouse, or you add a spouse. Those are things that are considered a qualifying event. And all changes must be consistent with your new election choice. So, and it must be within 30 days of the qualifying event. So if you have a new child, or if you marry someone else, you need to make your changes to your elections within 30 days of the qualifying event. Okay. To receive funds from your account, you must complete and submit a claim from reimbursement online. I mentioned that before. It will be good to make sure you have the online app. Or they have an app that you can download, I think, onto your phone. From what I understand, everything is processed a lot faster if you submit your claims online, but they also do have a website if you don't have the app. You can also do it by email, or you can do it by fax, and I do believe you can actually mail them in, but I don't suggest that. Snail mail is very slow. Too many things can be lost in the mail. It's just not a good idea. A detailed outline of the reimbursement process can be found in your open enrollment packet. We're going to take a brief look at just an overview of kind of the process, not in detail, but just to give you an idea or the gist of how that's going to look. We'll look at that in a little bit, but you'll be able to look at the details in the open enrollment packet, and I'm going to show you where that is. Just as a reminder, you are eligible to roll over up to $500 of unused funds to your healthcare FSA. Now, I want to mention something. This $500 rollover does not apply to the dependent care. It's the healthcare FSA only. Okay. So hopefully you guys understand that and no one dropped off at prior to me mentioning that. Any funds left in the account at the end of the grace period for the plan year will be forfeited. Okay. Key information continued. Okay. So your annual election cannot be changed. I mentioned this after marriage, or unless you have a qualifying event like marriage or divorce, birth or adoption, or someone passes away, or you have a change in the daycare provider. In the event of termination, let's just say you end up not working at the district anymore. In the event of termination at the end of the month for when you last contributed to the tributed becomes your termination date. So that becomes like the end of when your flexible spending account can be used. Because remember, with a flexible spending account, those funds are taken out of your payroll deduction based off of how much you have allocated. And for the daycare spending, you only have available to you what has been deducted. But it's a little bit different when you have the healthcare FSA because you have eligible to you from day one the full amount of whatever you allocated. If you were to leave, you would not necessarily be responsible for paying that back per the guidelines of the IRS. But you would not continue to be able to use it beyond your termination. Okay. All right, Shakely benefit card. This is actually addressing one of the questions that someone had earlier, and I will talk a little bit more details about it. So the Shakely benefit FSA debit card. So Montebello's chosen to have you guys have the option to enroll in a Shakely benefit debit card for reimbursements to limit your out-of-pocket healthcare expenses. So you don't have to actually pay cash and then go through the reimbursement process. With you having the debit card, it's so much easier to be able to use the debit card as opposed to paying out of pocket, submitting for reimbursement, and then getting it, direct deposited into your account. It's so much easier if you can just use it right off of the debit card. The card can be used to pay for any of the eligible medical expenses or procedures that we discussed and that you can find in your Shakely enrollment guide or on the IRS webpage. I mentioned this too before that you can't be guaranteed that the card will be accepted at all providers. However, there's a good chance that it will. But if it is not, you will simply just have to go through the reimbursement process where you pay first and then get reimbursed for it. Do not throw away the card if you've just gotten the card. This card is good for 3 consecutive plan years. So you don't want to throw the card away each year, okay? If the transaction is over $50, there's a possibility that Shakely may require additional documentation. So please keep a copy of all your receipts and invoices just so that you have that. So how do you submit the claim? All right, well, let's take a quick look here. The easiest way to do it is to log into your online account. I mentioned that before. Enter your information via the online claims entry tool. When you log in, you'll be able to see that. You can also submit a paper claim via fax documentation. And so you have to attach a receipt for each of the expenses for which you're requesting reimbursement. So just to know that. And it must include date of service, the actual service, the amount paid or owed, and the tax ID or social security number of the provider. So that's really mainly for the dependent care claims. So for example, if you have, a person babysitting and you've paid them and you want to be reimbursed for it, then you're going to need to put their social security number on there, which is why I said you want to make sure that if you have someone babysitting for you, that they are okay with you being able to give their social security number. If they're babysitting business, quote unquote, they should have a tax ID. Okay. Acceptable forms of documentation, just so you know, are service invoice from the provider, a cash register receipt listing the purchased items or services, or an explanation of benefits from your insurance provider. So if you don't have a receipt, if you have a plan like an Anthem Blue Cross or Blue Shield, they typically send an explanation of benefits that breaks out what you paid and what you were not responsible for. And then if you're going to fax it in or email it in, you can fax it to this 513 number or email it to the 125@shakely.com. Again, all this information is going to be in this presentation that I'm going to send to you. It's also going to be in the Shakely Open Enrollment Guide that you will have accessible and can be found on the benefits webpage, which I will show you shortly. Payment and processing in general, claims are processed for payment twice a week on Wednesdays and Fridays, except for holidays. Any claims received after 5 on Monday Eastern Standard Time are processed for payment on Wednesday. Anything received on Wednesday by 5 Eastern Standard Time is processed for payment on Friday. I want you to remember Eastern Standard Time. Shakely is based out of Ohio. We're here in California, Pacific Standard Time. So if you submit anything at 3 p.m. our time, that means it's not getting to them until about, if you're in the fall, I believe 6 p.m. I think right about now. I think there's a 2-hour difference if I'm not mistaken. So just keep in mind the time differences. Check reimbursements, if applicable, if it's a check and you're not doing direct deposit, they are mailed on the next business day immediately following the date of processing, except for on holidays. Direct deposits, if applicable, take 2 to 4 business days to post to your account, depending on the schedule chosen by your employer. So you'll be able to see you can reach out to your benefits department to find out what the schedule is. So you see why if you do things, with direct deposit as opposed to check, why it's a lot easier, and even easier still if you are able to use that FSA debit card. You won't have to go through all of that. This really just kind of goes over direct deposit reimbursements. You have the option to have your reimbursements directly deposited into your account, and you'll just have to use the request form from that you can get from the Shakely customer service. And I am willing to bet that you can also find this form in the online portal for Shakely, so you can check that. If you are not logged in and haven't registered, I'm going to show you here in just a second how you register. You don't need to renew your direct deposit set up each year. It's carried over into each new plan year so long as you renew your FSA. You re-enroll in your FSA, okay? And if your banking information changes, as always, you need to make sure you submit that information to Shakely so that they know that, because they won't have the information if you don't submit it. So it is highly recommended that if you have a flexible spending account through Shakely, that you set up your online portal, okay? Register your account. And you want to do this because a lot of the communication that you are going to get around your flexible spending account is going to be sent to you through your online account. That's where you're going to access that information. So you definitely want to do that. And to register your account and log in for the first time, you want to follow these kind of steps. And I'm just showing you here, but if you don't get all this written down, don't freak out, because this information and in more detail is going to be in the open enrollment guide that you will have accessible to you on the benefits webpage. But you're going to want to go to the Shakely website, and under existing user, you would enter login and put in your username, first initial, last name. Well, your username is your first initial, your last name, and the last four of your social. Okay, so that's if you're a current participant. Your temporary password is the last 5 digits of your social security number, your first name, your zip code, plus your last name. So that's a lot going on, but just follow that format and you should be fine. And this is typically for people who have their FSA, but they've never set up registering their account, okay? So this would not be for someone who's a first timer, just doing it for the first time, just now getting their flexible spending account, never register their account, okay? These steps are for people who already have a flexible spending account and they just never register their account, okay? So then after that, you'll have to choose your security questions and you'll be prompted to create your own password, and boom, you're in. That's how you would do it if you are currently an FSA account holder. But if you are a new one and you've never registered your account, then what you're going to, so it says don't use this step if you were a 22, 23 plan year holder, that's basically if you have an FSA already and you want to go ahead and use the returning participant option. So what you want to do if you're brand new, just got your FSA, you're wanting to get set up, you need to register your account. You go to this website and you enter Sky 32715 in the code where it says, in the field where it says enrolling for the first time. Do you guys see this down here at the bottom with the red circle, enrolling for the first time? And then on the next screen, it's going to ask you to enter all your info, name, birth date, home address, all of that stuff. That's all setting up your profile. And once you do that and you click next, then it'll ask you for your security questions. You select those, you select next, and then you are in and you can kind of finish whatever the remaining prompts are to do that and you'll be set up. So again, the open enrollment guide is going to have all of the specific details around, how do you set all of this up? How do you do reimbursements? All of that information is going to be on the Montebello webpage, which I'm going to show you here in just a second. So I'm going to stop share on this so I can show you all where exactly you can actually find this on the Montebello webpage. So I'm going to pull up, I think I have the Montebello webpage, and I'm going to drop it in the chat box as well here shortly. But I'm going to pull up the Montebello webpage so that I can show you, and I'm going to share screen now. Let's see here. Main page, share screen. Hopefully you guys can see that. If someone could take themselves off mute, just tell me if you can see my screen.
Yes.
Okay, perfect. It's a good question. Can you get multiple debit cards for a spouse? I'm assuming you can, but I'm not 100% sure. So you would just have to check with Shakely to find out on that one. So so here's where you want to go. This is actually a good brief tutorial for all of you guys because all of these workshops and all this information that I provide, if you've ever gone to or attended any of my workshops, the benefits department typically posts all this information online. But here's where you go. You go to units, benefits, boom, we're at the benefits webpage now, okay? You want to scroll down and this is the current year's information. As I mentioned, they just received the Shakely information for the new year today. So they have not yet uploaded it, but just pop back onto this page next week, it will be there. But here is the information. The information still looks the same. And this is the open enrollment guide that I mentioned to you that has all the steps in all great detail, okay? It's going to look the same, but we'll have the proper dates and it'll be the new information. So when you look again next week, that's where it's going to have the updated information, okay? There is also the enrollment guide that has all the detailed information. So this is a 13-page guide. And in this guide, what you will also find in here is the full comprehensive list of things that are eligible and ineligible. So if you're really got a specific item that you want to make sure whether or not it is something you can use for your healthcare FSA, you can go in here and you can kind of look through it. And this is really, really based off of the list that is set up by the IRS. If you want to find even more comprehensive lists, you can go to the FSA store link. FSA store is actually a really good place for education too around FSAs. If you were not, if you forget some of the information that we talked about today, or you have more detailed questions around FSAs, you can actually go to the FSA store and they actually do have a lot more information there. This has more information on the dependent care eligibility stuff. And again, these are the steps that we kind of went over with regards to registering your account online. And then here's the information with regards to the actual benefit card. And I don't see anything on here in reference to how many cards you can get, but I'm not looking at it in detail. So you do want to just contact Shakely on that one. Okay. So it also has on here your claims, online claims entry form. You can find that here. You can also find the dependent care reimbursement document, healthcare reimbursement document if you're going to do everything manual. So all that information is here on the benefits webpage. What you'll also find on the benefits webpage, I mentioned at the beginning of today's session, this is the flyer that was sent out to advertise to you guys about today's event. What's on here, just in case you missed it, this is the link for the recording for last week's session, as well as the resources. So the flyer that's going to go out for next week's workshop, it's going to be set up the same way. So you'll be able to view the recording of today's session on the flyer itself, okay? And then there's other information that is typically loaded. This is last year's open enrollment resource hub document. At the end of the virtual benefits fair events, there's going to be a new one set up with all the current information, but we leave this one up from previous years until all of the workshops and all of the information has been replaced, because we want you to be able to have access to all of the information and the resources all throughout the year. So that's why that stays up there all year long. All right, so that would conclude today's workshop. And I just want to find out from any of you if there were any questions that you guys have for me. No questions. All right, then I have some questions for you. If you are a brave soul, I have two $20 gift cards. If you attended the last session, you know that I gave away gift cards for those who were brave enough to answer some questions regarding the content that we covered in the workshop. And the first question for a $20 gift card, if someone is brave enough to take themselves off of mute and ask the question or answer the question, is, can someone tell me, with a flexible spending account, healthcare account, how does the IRS deem the expenses predictable or unpredictable? And what does that mean? Does anyone remember? For a $20 gift card.
Unpredictable.
Unpredictable, yes. And what do you have, just you've already secured your gift card, but can you recall what that means?
That means that you really don't know what your expenses are going to be for your medical bills.
Yes, that is true. But from an IRS standpoint, what it essentially means is that because of that, you have access to your full amount of whatever you allocated for your healthcare FSA on day one of your plan year, as opposed to having to wait till all of your payroll deductions are taken out to add up to whatever you allocated. So perfect. Thank you so much. If you could be so kind as to drop your email address to me in the chat box, that would be perfect. That way I'm going to send you your e-gift card. All right, second question for the last $20 gift card. Let's see here. What do we want? Okay, so for the dependent care flexible spending account, what is the maximum allocation amount that you can allocate in a given year for the dependent care flexible spending account? Does anybody remember that?
Yes, that would be 2,500 per dependent, maximum of 2.
Yes, perfect. Yes, thank you so much, Katie. So if you could pop your email address down in the chat box for me that you would prefer me to send your e-gift card to, then I will get that sent over to you. All right, everyone, that concludes the content of today's session. I just want to take one last throw out there to you guys. Did anyone have any other questions? Please let me know. Feel free to pop it in the chat box if you want to. I'm happy to answer the questions there. And if you're not comfortable asking any questions in today's session, I'm actually going to do two things. As I promised, I am going to go ahead and put the link for the Montebello Unified School District Benefits Department web address in the chat box right now. Just drop that in there now. And I'm also going to put, there is one thing on the today's session that I did want to show you guys, and it is the resources screen, because it has my contact information as well as some other resources that I think might be very helpful for you guys. So a customer service representative is available to help you all with any questions or concerns you might have about your flexible benefits plan. And they're available Monday through Friday, 8 a.m. to 5 p.m. Eastern Standard Time. And you can contact them by phone or email. This is the link to the Montebello website that I dropped in the chat box, but it is also in this presentation deck, okay? And so that is, we did our raffle already. So those are some resources that you can take advantage of. And then I am going to also pop my email address into the chat box. So if you have access to being able to, oops, sorry, Katie, I didn't mean to send it just to you. I want to send it to everyone. One second here. And if you are dialing in from your phone, my email address is pretty easy. It is aja@jglynn.com, asia@jglynn.com. I've also put it in the chat box. So if you find that you have questions and you're just not comfortable asking the questions right now during today's session, feel free to shoot me an email, and I am happy to set up some time with you to answer any questions you might have. And if there are no other questions for today's session, I want to thank you all so much for joining today, and just ask that you tune in next week. We do have a workshop that is focused on filing a complaint with the California Department of Managed Health against any of your health plans that you have had some issues with. You can also do filing a request for a second opinion. So if you were denied a treatment plan or treatment regimen or a type of service by your health plan, you can actually submit a request through the California Department of Managed Health to see if they will have an outside third-party service take a look at your situation and determine whether or not you were really right, and they can compel the plan to utilize that particular treatment regimen. And I'm going to go over some details around that, kind of how to do it. And it's really simple. I want to make sure you guys have that information. All right. Without further ado, that's it for today's session. I look forward to seeing you all again, and have a wonderful, wonderful weekend.